And Glenn, last night, or I guess not last night, last night, the pound got absolutely annihilated, taken all the way down to 122.5. It's rallied back to now sit just north of 123, but this is becoming an interesting story here in sterling. The one currency you thought maybe was safe from this unprecedented dollar bull run is now giving back ground, got close to 122, and let's just take a look at 122 for the last couple of years. You probably know better than I. Yeah, this market has gotten down lower than these levels, obviously, in recent years, but trading near 122 now, that's the low since October, fall of 2023, so a little bit more than a year. And then, of course, you go back to all the craziness in 2022. This market broke all the way down to around 110, took one, crazy shot down to 105 before bouncing back. I mean, out of all this data, Glenn, this is weekly data for the last, what is it, almost a decade, about 6-7 years here. Not a lot of data points below the 120 marker, and we're getting dangerously close.
But I will say that this one's been a funny one timing-wise because, dollar, you can't stop it right now. And we saw this move, and you're like, wow, 122, let's zoom out, as we just did. And compared to all these other extremes, this one, now you're thinking about it, and you're like, wow, why hasn't this happened sooner? Mm-hmm. That the pound has been a bit held in a lot better than a lot of these other currencies like the Australian dollar, where you're looking back to that 62 handle, and there really isn't a lot going back in that same time frame. Euro, even the same. I mean, we're pretty much there. That flashes lower, obviously, when we went below parity. But other than that, we do see a few instances where that pound is that weak. But for all these other pairs, we've been there in that territory.
Yeah, the pound has definitely been the strongest. And let me put these all on the weekly so we can rotate through and take a look. I mean, you look at this and you say, okay, well, until this week, this pound market has not even seen lows for the last year of trading because it held in above 125 amid all of this dollar strength and currencies abroad weakness. You go over to the Aussie, and it hasn't held anything for the last couple of years. And keep your eyes on this 2022 data point here for good measure, because that's the craziest move in U.S. dollar for the last several years. I would even say, keeping in mind the pandemic, and you might say, well, Frank, the Australian dollar got lower during the pandemic. Well, keep in mind that Australian dollar a lot of times is a risk-on trade. And so Aussie got hit pretty hard in March of 2020 because not only did U.S. dollar, it actually saw both sides of the trade. It saw some weakness and then some strength as well as a flight to quality relative to Australian dollar. But also Australian dollar does act a lot like an equity market. Like I say, it's way more risk on than a euro, than a pound, than a yen, of course. And so that noise there is a little bit crazy to me. And thus the 2022 move here that we're already through when it comes to Aussie is really crazy because you look back at euro, and again, now that you take out that risk on kind of mentality, you see, in 2020 around the pandemic, this euro market did not get anywhere near the lows of 2022, thus making my point. That's really been, honestly, in my whole career of trading, coming out of university in 2015, so now closing in on a decade. Wow. Thank you. That 2022 move is the craziest.
Yeah.
I mean, we don't have any kind of basis for trading below parity for this euro dollar. Euro dollar, one of the highest volume pairs, one of the most quoted class euro area, US the two largest economies
Right.
on the planet. You have to go all the way back to 2001, 2002. You're not born at this point. Are you?
2001.
2001. Okay.
So I'm there.
And I am rounding out, what is that? Second grade?
Yeah, 7 years old.
7 years old. And so in my trading career, again, this 2022 is the craziest moment. And one of those crazy moments, Glenn, that you think, okay, we got the mean reversion for, let's just stick on Eurodollar here for a second. We got below parity. We spent a handful of weeks below parity. I don't want to make this seem like that British pound move where it was like got down there and then rallied right back. But we saw this mean reversion, Glenn, back to 105, 110, more normalcy here in the 110 to 115 range. That's probably a more historic average, more accurate for the last 10, 20 years of trading in Eurodollar. And now we're getting right back down into that territory. Yeah. And so it'll be really interesting to see, especially because this pound is now breaking down. This now makes it become, it already was a US dollar story, but it's even more, I mean, depending on what side of the trade you're on, scary or good, whatever, because this pound is seeing a lot of weakness. It's not holding up at all.
Yeah, and you make a great point there of this robust dollar story, and you're thinking, we're looking at these markets and we're talking about historic mean reversion, and maybe, yes, eventually everything comes back and it's all good, but really we haven't had any reason why now. And so we'll look to this non-farm number today, maybe for to see if there is some slight reprieve. But right now there hasn't really. We have the price action and the historic charts to look back on to make a case for reversion, but there hasn't been a momentum. We thought early this week on Monday that they're on that tariff rumor, maybe Trump will be nicer than we thought, and that just got completely erased by both U.S. data again, and then different reports on Trump tariffs saying no, papa. I might use some executive power to really bring the hammer down. So this is super interesting to me, and we're at levels that we haven't seen, but not really seen a chance for all these other
mean reversion
right now.
Mean reversion is a tough thing because you look at one of the most classic mean reverting markets, historically speaking. Have to give that caveat because of course anything can happen.
Right.
Like options prices can be the most expensive they've ever been forever, and VIX, which is one of the most mean reverting markets, can fly off the page and never come back theoretically. It hasn't historically happened. So with these mean reverting markets like a VIX or like we just went down with a Eurodollar or any currency markets, a lot of commodity markets as well tend to be mean reverting historically. Timing is the thing.
Right.
And to your point, we kind of looked at this rally here to start the year and said, okay, this might be it. Maybe we've gone to the extreme of the tariff talks and the U.S. data that's separating from the global data that is causing U.S. rates to potentially stay higher than those global rates abroad. And now the market's right back down to where it was for an Australian dollar, for a euro dollar here on the daily basis. You saw this nice rally, broke right down close to 102 to start the year, to end last year, to start this year, and then bounced all the way back above 104. Couldn't hold it for even a day. And we're right back down to 103, right back down to those lows. And yet, I mean, do I go into a number like today with non-farm, and the number is expected at 160, previous was 227, and you can see we've been doing a lot of bouncing back between those levels of mid hundreds to above 200, and on those above 200 days, you've seen the dollar rallies and the U.S. Interest rate rallies and some of these crazy moves. Do I go into a number like this, Glenn, saying, oh, this could be the number that turns the dollar over, and so I'm going to go full boat into short dollar going into this event? Absolutely not. If you're looking to trade non-farm payrolls, then trade non-farm payrolls like you would any short-term event. Now, if you're a swing trader, which is maybe a multi-day strategy, or a long-term trader that's looking for that long-term reversion, maybe this number gives you a move in one direction or the other to get into a position or start to get out of a larger position. Maybe you've been short dollars, the number comes in lower, you see a big dollar sell-off, and you get out of some of that position, then great. But yeah, I wouldn't necessarily go into this, because I do agree with some of the sentiment you were getting at. This is the type of number, like an FOMC event, where nothing crazy necessarily happens, but the market can start trending in the other direction. And obviously, you look across the board. I mean, I also want to pull up this CAD piece, because this is one that's quoted US dollar on the front end of the quote and Canadian dollar on the back end of it. And you just look at this non-stop runaway train of a US dollar rally the last several months, and you look at, they tried to knock it down, like we said, to start this year. We're back above 144 in dollar CAD, and you're looking for anything to reverse this trend. Or if you're a trend follower, obviously
blast off mode.
Yeah, this number could come in hotter than expected, and you could say, okay, 144 is the new low part of the range. We're heading towards 145 and beyond. But yeah, you don't want to have a big position going into something like this, hoping that it goes one way or the other. Because this could be one of those that does turn that trend or exacerbate it further.
And thanks for highlighting this Canadian dollar as well, because we're getting Canadian unemployment at the same time, and so that's always an interesting one. And with the backdrop,
I have Canada on here.
The backdrop of that Canadian political uncertainty, we'll see if this is. That 6.9%. That's not where you want to be long term. Not sure how much any of these political decisions will depend on what this unemployment number is, but worth pointing out that at the same time, you're getting people digesting both Canadian unemployment and U.S. unemployment.
And this has become a huge number. These numbers go in and out of vogue and importance. And this number has become huge because the number has become huge. This is not one of those scenarios. Sometimes you'll see like Turkish inflation is like triple digits. And it's like, I guess that's how they get down in Turkey. And it's like Canada doesn't normally have 7% unemployment. That's why their interest rates have fallen from close to 5% to 3% in like 2 or 3 meetings. And that's why, part of the reason why the Canadian dollar is getting annihilated relative to the U.S. dollar. And so good call by you. I mean, it's a couple of North American employment data points here today. Maybe the Canadian dollar piece doesn't really, or the Canadian unemployment piece doesn't really hit equities and isn't as, asset class divisive as the non-farm number. But man, for forex markets, those are a couple of numbers that'll shake up the ending of this week and could potentially change trends for the rest of January. We've got a bunch of inflation stuff coming up the next couple of weeks and a Fed event by the end of this month. So watch these numbers and watch these prices. We'll see what happens with this continued dollar bullishness. Glenn, thanks so much for jumping on, covering the Rizzler, covering Jimmy Carter.
You're very welcome.
The Trump, Obama, Kamala memes. Classic, as always. And hey, man, I think we call it. Let's get out of here. I think this is the end of Friday.
I'm drained.
We've done our work. Let's hit the bar. All right. Thanks, everybody. Have a great rest of your day.